Hello, everyone, and thank you for joining us on today's webcast. My name is Jameson Burko. I'm the capital markets reporter with the Globe and Mail. I'm really looking forward to moderating today's discussion. But just before we get started, I would like to acknowledge that the Globe and Mail's headquarters is situated on the traditional territory of the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. My colleagues and I are very grateful for the opportunity to live and work on this land. But of course, what we're here to talk about extends really to all the lands around the world, and that shifting global trade landscape that really does seem to be shifting all the time beneath our feet at the moment is marked by rising tensions with the United States, disrupted supply chains. There are new challenges and considerations for Canadian businesses every single day. So with these challenges, of course, comes opportunities for innovation, expansion, and resilience. And that is what we will be talking about today. And I am joined, of course, by business experts who are going to share their strategies on what to consider in today's market, providing tactics for driving growth, staying competitive, both here at home and abroad. But you will get a chance to get your questions in as well. We're taking the last 10 minutes of this webcast to answer your questions from the audience. If you do have questions for our speakers, you can type them into the virtual Q&A box. And of course, on behalf of the Globe and Mail, I would like to recognize Don Grant Thornton for supporting today's event. And with that, let's jump right into it. To comment on the latest economic headlines, I'd like to welcome to the program Claire Fan. She is the senior economist with Royal Bank of Canada. Welcome, Claire. Thanks for joining us today.
Thanks for having me.
So, one of the most recent economic headlines that certainly has been driving business decisions is the interest rate cut, now at a 3-year low from the Bank of Canada, 2.5%. First cut in 6 months after a wave of reductions from that big run up in rates that we saw immediately after the peak of the pandemic. So it noted that was particularly interesting that they could cut again if risk to the economy increased in coming months. So does that suggest that we're on a recessionary path now?
So I think from actually the Bank of Canada does publish their economic projections, even though they didn't do it this past meeting, but they do it on a every other meeting basis. So we're going to know what they think about the economy, moving forward. And given the sort of the uncertainty that we're seeing and similar practices that we're doing right now, they have resorted to giving us a scenario or different scenarios really of what they're expecting. And that's really, the best, some of the best guessworks out there, because frankly, there is no playbook for the trade shock that we are in. It is the highest level of tariffs that we have seen since 1930s. So it's incredibly challenging to do any type of economic modeling, because models, what they do is essentially they regress on past trends and tell you, given what we're seeing in the data, what is it supposed to be telling us. But as far as to your question, in terms of what the bank is expecting, I think the decision to cut itself, like you said, made it abundantly clear that they are worried about the economy. And not only are they worried about the economy, they are worried to the extent that those worries can almost override their concerns about inflation, which is their primary mandate. So that's telling us, and they said very explicitly that they're actually expected housing household spending to be pulling back in the quarters ahead.
So one of the sources of uncertainty that you were just referring to is definitely the trade relationship with the United States. And in terms of, the bank's forecast and all of our attempts at forecasting, I know that the trade agreement we have with the United States and Mexico, it's up for review this year. We've been talking about it at the Globe and Mail pretty significantly in recent days. How does that factor into the uncertainty planning? It's been a source of some insulation economically for Canada in terms of what kind of trade policies we've seen from the US administration over the last 6 to 8 months.
Yeah, absolutely. I mean, the Kuzma agreement is really the most important backstop for Canadian businesses right now, outside of the ones that are specifically targeted. So broadly, there are two sets of tariffs. One is called IEPA tariffs. So these are country specific, meaning that the US kind of imposed, like, let's say, well, currently it's 10 to 15% tariff on all products in a given country. And then there are Section 232 tariffs that are product specific. So these include auto tariffs on non-US content. These include specifically on Canada, steel and aluminum and copper tariffs as well. So it's really sort of a combination of these two tariffs. But what the Kuzma agreement has been doing is essentially it has continued to allow nearly 90% of Canadian exports access to the US market without duty free, frankly. And that's all because of the exemptions that are currently given, which are saying, if your products comply with Kuzma rules of origin requirements, then they can still enter the US without without duty or duty free, in other words. So that's kind of the thing that we've been pointing to. So I think coming around, it's gradually becoming consensus that that is the reality, that this trade shock is perhaps not playing out the worst, along some of the worst scenarios that we were envisioning during spring. And that broadly, even though we did see a substantial hit from Canadian exports to the US in the second quarter, the bottom line is kind of holding because of the Kuzma agreement. And I think as far as 2026 goes, there is a common misconception that the agreement is ending in 2026, and that's not correct. Actually, the 2026 marks, or July 2026 really, marks the start of a 10-year renegotiation period. And that's scheduled really to kick in a decade after the agreement first started. And that's what we're essentially seeing. What people are not talking about really related to Kuzma is the fact that much like the predecessor NAFTA, any country could really back out at any given moment by giving 6 months notice. And I think the fact that we haven't seen that, we haven't seen a unilateral withdrawal from either trade party, US, Mexico, or Canada, is perhaps in a way saying that all parties are still seeing value in the agreement. And that's should be interpreted as a good sign.
I suppose, where does the path lead from here, though, in terms of Kuzma? And of course, that is the bedrock of the Canada-US trade relationship, and certainly a huge question for a large, if not, majority, really, proportion of our small and medium-sized businesses in this country, is whether or not that is a relationship we can continue to count on. So, what are your expectations in terms of where our relationship with the US goes from here? Of course, there is always a concern that with the current administration in the White House, that they could simply, like you noted, walk away with 6 months notice, and that there's very little that can be done to anticipate whether that may occur.
Right. So I think to answer your question, in the near term, like you said, a lot rides on the continuation of the exemptions related to the Kuzma agreement. And on that note, this is one thing that perhaps, we've been really focusing on in the past, which is that the agreement is benefiting really all trade parties that are involved. So a really simple way for me to explain that would be the average US tariff rate. So currently it's sitting around 15 to 18%, depending on which months of trade flows that you use in terms of the data. But it could increase to over 20% by 6 whole percentage points if those Kuzma exemptions get taken away. And we're seeing a huge hit, frankly, to US manufacturing, which is also the sector that these tariffs are supposed to be helping the most. We're seeing persistent job losses in the sector. We're also seeing, if you were to look at some of the other ISM manufacturing index, production has been in contraction for 6 straight months already. So not a lot of good signs. And all of those challenges would only be exacerbated if the exemptions get taken away. So I think the bottom line is, in the near term, hopefully there are good reasons, as unpredictable as US trade policy goes, to still expect the Kuzma exemptions to continue to hold for the sake of the US economy in this case. And then over the long run, I think we've been highlighting that there are, infrastructure restrictions, or really capacity restrictions when it comes to trade diversification, and how much we can do that. Because frankly, to do that, we need better port infrastructure. We rank pretty well in terms of rail and road transportation, but ports are not one of our strong suits. And if you want to trade offshore, that's one of the areas that we should be spending money, where we're really and to expand on.
So the federal government actually just announced plans to modernize several ports. Was that something you think is going to, filter down into some positive economic sentiment?
Yeah, absolutely. I think that's like perhaps the first step towards a right direction, which is again modernizing trade infrastructure and making sure
Hmm.
that in order to get Canadian goods onto Tidewater, that we have the capacity to do that.
So I want to shift gears a little bit because one of the things that I love about what economists do is the way they can parse out household spending and see the trends in that. I love to get a sense from you of what you're seeing in Canadian household spending right now.
Right. So we actually have some proprietary data. So we do track
Hmm.
RBC's own car spending when it comes to debit and credit card. And what we're seeing, which is actually quite interesting, and one of the key reasons that we really didn't foresee a recession in the spring, like many others were doing, was the reason that, what happened back up a little bit in terms of April, sort of, it's really a dizzying pace of news announcement coming out of the US administration. Um, what we saw was a huge divergence between so-called soft and hard data. So soft would be sentiment data, essentially. So consumer sentiment or consumer confidence took the biggest plunge in history in sort of March, April, versus if you were to look at so-called hard data, which are consumer spending, they were still doing okay. Households were still spending. It's just really the uncertainty was, again, really plunging the sentiment. So that was kind of the question, which one is right and where do we see spending going moving forward? And I think what we've seen again from the card data to date is even into sort of August, we're still seeing pretty resilient household spending activities in Canada as well. And then if you were to look at Q2 GDP, which was obviously a contraction on a quarter over quarter basis. So meaning that activities, the economy got smaller essentially in the second quarter, but all of that was because of net trade. So if you were to look at household consumption, actually it was an upside surprise. It was quite strong, frankly, in the second quarter. So I think that's one of the key reasons that we're still cautiously optimistic about the outlook of the Canadian economy is that this impact that we're seeing from the trade war does appear to be highly concentrated. It's very
Hmm.
regional and it's very sectoral as well. So we're seeing it hitting potentially just manufacturing and transport and wholesale, these
Hmm.
related and more trade exposed sectors. And if that doesn't spread, hopefully, which is the case, where I hope, and we should be more, we're still not anticipating really a recessionary outlook.
So where does you meant that, so that's the hard data. Just quickly, where is the soft data indicating now? Is it still very low? You know, it took the biggest plunge in history. Has it recovered somewhat, or is it still mired?
Yeah, so consumer confidence has bounced back, and I think it's still quite a bit lower than where it was before the pandemic, and that's still reasonable. Again, tariffs are still here, and labor markets have softened quite a bit. We did see the unemployment rate here in Canada increase since the beginning of this year,
Hmm.
so it's still softer than usual, but it has bounced back.
Well, I'm afraid we do have to leave it there for due to lack of time, Claire, but I could probably keep you going for several hours. I'll let you take a breather. Thanks so much, though, for sharing some insights with us.
You got it.
And that, of course, Claire will be rejoining us. Folks, keep in mind that for the last 10 minutes of the webcast, we'll be taking your questions. So if you do have questions for her, please submit them, and we will see her back soon. But for now, I'd like to welcome today's panelists. We have three very prominent business leaders from across the country. We have first Sean Zhang, the Chief Operating Officer of Sokoshi. We have Jason Tassi, the President and Chief Operating Officer at Lee Valley Tools, and of course, many of you have probably seen their catalog. I know that my wife and I are actually, full disclosure, huge devotees to that catalog. So thank you, Jason, for pumping that out. That's very much a treat for us. And last but certainly not least, we have Tara Benham, the national tax leader at Doan Grant Thornton. She will be able to answer questions that I frankly was just a few weeks ago desperate to get answered. So she's a highly knowledgeable person, and we are grateful for her presence here. And of course, Sean's and Jason's as well. Thank all of you for joining us. I think maybe a good starting point is you could each tell us a little bit about yourselves as it relates to this very dramatically and constantly shifting trade landscape where Canada finds itself. So, Sean, why don't we start with you?
Sure. Hi, everyone. My name is Sean Zhang, and I'm the Chief Operating Officer at Sakoshi. We're a retail brand specializing in Asian beauty products. And over the last few years, we've scaled across Canada and now the US. My role is very operational. So a key component of that is making sure our teams are able to execute growth, even in a volatile trade environment. I spend a lot of time thinking about how to stay adaptive when the ground is shifting. And look, there's been a lot of that lately.
And Jason, you're up next. Please tell me that the trade relationship and dynamics is not impacting the catalog that's going to be coming out.
Well, the good news is our main catalog is coming back, so you'll be happy to hear that. Uh, we would sum it up, we were chatting as a leadership team, and in almost 5 decades of business, we haven't dealt with this level of disruption and unplanned complexity. It seems like not long ago, the tail end of the pandemic, everybody was just hoping for like stable days when we could predict what would happen tomorrow. And not only has that not happened, we feel that it's gotten far more complex and more of a challenge, than in previous years. So as a business, we were just normalizing for the past few years. And then, come February, March this year, things have really become a challenge for us. Fundamentally as a business, we have long-term expansion, strategic plans, and it's been a real mindset shift to protecting the business, trying to manage through the increased complexity, and it's fundamentally has affected how we price, what we offer, where we sell, how we ship, how we buy. Almost every aspect of the business has been exposed to some multiple of complexity that we were not prepared for.
That's a chilling and accurate summation, I think, of the situation where many of your colleagues and co-entrepreneurs find themselves. Jason, Tara, you have a unique perspective here from this tax point of view. What have you been seeing in the last, call it, year or so?
Well, I guess our focus is privately held business in Canada, so that is who we advise to. And I guess from a tax side of things, we look at anything to do with change triggers tax. So I call it dying, buying, selling, transitioning, and this is creating a massive amount of change. So from our side, what we're looking at is our role, and our role to our clients is sitting back and assessing where are they, what is their situation, where do we want to go, and then how are we going to get there. So from an advising our clients perspective, it's very much that holistic dealing with the uncertainty and how do we navigate together.
Right. Well, thank you all for setting the stage for us. Jason, I want to go back to a point you were just making about the way the current situation impacts really everything you do in terms of, what you sell, how you sell it. Can you go into a bit more detail on those challenges that you've been facing and how you specifically were able to overcome them? And, you can obviously, pick your favorites.
The majority of our time has been spent on our product assortment and the relationship with our customer. And as a leadership team and a management team at Lee Valley, we've had to create, very similar to Tara's point, an internal capability around response management. And we always reminisce, like on Friday we would receive a White House fact sheet on what would change. As an organization, we would spend hours right through to the weekend to review all of our products, how they're affected by a potential price change, a tariff, what it's going to do to the supply chain. And then we would just have to ask ourselves simply, is this product even economically viable to offer anymore? Now, to your point earlier, like we have printed catalogs, that have been in circulation for, months to years. We've got all channel assets creative that are out in the market. We have a pretty robust planning schedule. So from a merchandising point of view, we have email set, product releases. Like we have months and months of planned activity that are in execution mode that are just turned upside down. And just with the recent steel tariffs, like we have 2,400 products not available right now to ship outside of Canada because of the steel requirements and the need for us to declare the derivative source of steel. So just imagine how many vendors we would have to reach out and ask them for where is this steel smelted that is, on the lid on this jar or this product. So the complexities have been significant, but fundamentally what it has impacted is our ability to service our customer and the 48-year assortment we've curated. So it's, and these changes on Friday are undone on Monday. So like it's just, as I said, I'll go back to the single most important thing is to develop a response capability within your organization. We really try, not to ruminate over what's happening, why it's happening. We just have to focus on the reality that we're in today. And we have to keep the team focused on continuing to serve the customer to the best of our ability and to deliver on the promise that Lee Valley has created.
Is there any way you could give an example of, or maybe there isn't one, but I just would want to ask of a product, you noted that, to go through this whole transition and eventually ask yourself, is it still economic to offer this product? Can you give an example of where, the answer came back no, and you no longer offer that product?
Well, I'll give you two. I'll give you one on the derivative steel issue. So, Lee Valley Tools is also a proud Canadian domestic manufacturer.
Right.
And we produce 1,400 products in hand tools, planes, spoke shaves, marking, measuring, drilling, and driving. And what will happen is because we can't classify the steel, we can no longer offer it into the US market until we can actually get like the specifics on some of the components of the products that we assemble and build. So those products get shelved until that we can actually identify and ship it. So that's a pretty significant impact to a Canadian retailer that also manufactures. And this is our house brand. So it's our competitive advantage to own and control it. But now it's far more challenging to assess, identify, and ship through across the US border. On the product side, we buy quite a few products from US distributors. And they buy from other countries around the world. So we'll bring them into our corporate headquarters here, and we'll fulfill from Canada. Well, the tariff costs are the ones inbound into the US, back to Lee Valley, and then back into the United States. So we have a number of gift items. So we were just recently building out our main woodworking catalog and our gift catalog. And over the span of weeks, we've had to pull product out and then find replacement product. So it just continues across all of our assortment. And, to give you a specific example, we have gardening items, that we would sell in the US. And all of a sudden, the margins aren't there, and the retail price just makes it no longer competitive on one of the planet's most competitive markets.
Thanks so much, Jason. That's a remarkable stressor to have to maintain through managing what's already a difficult business to manage. Sean, essentially I have the same question for you. How has your business been impacted by the economic uncertainty? What specific challenges have you faced?
Yeah, I would say for us, there are three main challenges we've felt and are continuing to tackle. First one would be supply chain volatility, freight costs, and lead time out of Asia, where most of our products are from, are generally very unpredictable, and it directly impacts our ability to keep our shelves stocked and providing the products to our customers. And I don't know if it's just me, but it seems like even weather and natural disaster disruptions are happening more often than what I can remember. Second is foreign exchange swings. When the Canadian dollar moves quickly against the US dollar or the South Korean won, margins can get squeezed for us. And third, and most importantly, I think it's consumer sentiment. In our line of business, I would say even in beauty, which is more resilient than most categories in a time of economic uncertainty, customers are generally more cautious with discretionary spending. So we really need to earn every purchase from them.
And Tara, if there were any common threads between all your clients in terms of the challenges that they're facing, have you noticed them?
Yeah, I think definitely, and we've heard them both in Jason and Sean's comments, and I would say
Hmm.
it's two key words, uncertainty and change. And if we look at it from that side of things, that's where we walk with our clients and talk about how do you deal with this uncertainty and change. Over 75% of Canada's exports are to the US right now. So if we look at uncertainty, there's a massive amount of uncertainty and a massive amount of reliance on one specific market. If we look at our trade infrastructure, it is built with that in mind. So how do we pivot to other markets and what does it look like? And what we're really seeing is businesses are refocusing on resilience, adapting their operations. As Jason said, what can we make and what can't we? Same thing with Sean. But the interesting part about this is any type of change or challenge, when we get through the back end of it, it does make us stronger. So whatever we're being squeezed to do, I think it will be a positive thing once we get through this.
So, Jason, let's have you pick up on what Tara was just saying, because you had mentioned when you were speaking a few moments ago about, really amplifying your focus on response capability, being adaptive. Do you feel that that eventually will help you emerge as a stronger business, as Tara was just suggesting, or is it too soon to say? And maybe you could start by just telling us a little bit more about what that response capability looks like.
Well, the nice thing about working at Lee Valley Tools, in particular for a family business, is we play the long game. So, like there's always cyclical ups and downs. The intensification of complexity as a result of all of this uncertainty is testing all organizations. We're not immune to that. And Tara, I completely agree with you. The harder the stress, the better the wisdom scars you earn through life. But, there is a threshold for all organizations. And, fundamentally, it's the speed in which you react, the efficiency and the focus in which you react. And it's difficult to measure that because everybody's business model is somewhat unique. Their assortment's unique and their relationship with their customers are unique. For us, fundamentally, the key is focus. And, we adopt the Stoic principle. It's not what happens, it's how we respond that matters. And that's where we want to, pour most of our energy and focus in. I'd say in the last 5 years, it's become one of our strongest capabilities is, the the desire to protect the brand that we all love, at the same time navigate. And I'm shying away from uncertainty because it just seems to be another day at the office. Really, it is what is the outcome of the uncertainty, and for us, it's complexity where we didn't plan on it. Businesses are built on stable policy. Like that is the foundation of organizational management. And when the foundation is shaken like it has been, we've got to step back and look at the whole entire system and say, okay, what's the path forward? Where can we predict what will change and where can we not? Like, it's impossible for us to tell you what will happen in the next 3 to 4 weeks based on where we've been. But what we can focus on and what's working and where we need to change. And that's the response capability that we're talking about. It is a frame of mind and it's a level of focus and is the acceptance of complexity.
Sean, do you have a similar approach to dealing with the uncertainty here? Are there specific strategies that you've looked to employ?
Yeah, I think for us, I would count our blessings as an organization that started to see our growth around the times of COVID. So we really learned, and unfortunately, this irregular uncertainty times is sort of the norm for us, and we've learned to adapt and grow with it. We lean into a couple of approaches, right? Number one is building redundancy to our supply chain in all aspects of our operations, having multiple suppliers, multiple ports of shipping, and warehouses in both Canada and US, right? In a lot of cases, unfortunately, this current situation is having just a plan B isn't enough. Sometimes we'll need to even have plan C's and D's. And then I'd say the second portion is really keeping our teams mobile, small, and really cross-functional so we can pivot and change directions quickly. Whether that's out reallocating inventory, adjusting timelines for product launches, or leaning into what's resonating with our customers more.
So, Tara, I wanted to bring us back to a comment you actually made the last time we were talking, because it's such a key source of uncertainty that we've talked about, for years now, frankly, since, before the current trade crisis, before COVID. The fact that 1 in 10 businesses in Canada, and I think that stats seems to be getting bigger every time I look at it, that they don't have a transition plan right now. So that's an obvious source of nagging uncertainty. But maybe you could comment a bit on how the current environment where we find ourselves, makes that worse.
Yeah, well, and if you think about it, 76% of our economy is based on privately held businesses.
Hmm.
So now you sit back and you say 1 in 10 businesses have a transition plan, which means that 9 out of 10 do not. Another statistic that's kind of dovetails into that is $1 trillion is going to change hands within, by 2026. So what does that mean from a business perspective? There will be a massive shift occurring, and 90% of the businesses have not planned for that. So what does that mean? Businesses, as Jason talked about with policy and it needing to be stable, well, leadership needs to be stable as well. And so if you have leadership that is changing and we don't quite know where we're settling, they're less likely to take risk. They're less likely to invest in innovation. I had one client and we were doing a strategic planning session about all of the different aspects of their business and where they were stuck and what they were doing. And what we came back and realized was 2 out of the 4 shareholders were planning on retiring within, 3 to 5 years, but they hadn't pinned down when and they hadn't pinned down how. And as we discussed all of the issues with that business, what we realized was they were not engaging in implementing change to address what needed to be addressed because they just didn't feel like they had the stability in leadership. So it really does create a bit of paralysis, or can create paralysis if not planned for. So that's something that we're really seeing. The other thing would be when we do see a transition and we have a fragment of ownership, there's often different. So if we say from different generations, there's often different desires and needs. Some want to invest in operations, some want to pull the cash flow out to fund their lifestyles. Some want control, some have different risk tolerances. So that shift has created a little bit less secure base for all businesses, which was reflected in everything that we do.
So how do we prod business leaders effectively to, because as I pointed out, like this is not a new issue, although the longer it persists, the more serious it becomes, as you know better than most. Um, how do we actually encourage action on this? How do we get them to step up and make a plan?
Well, the first thing I do is I try to scare them with the statistics that I just gave you. And really, it's when you're selling your house, you want it to have a painted kitchen. You don't want to be the 9 out of 10. You want to be the 1 out of 10. So really, it's trying to talk to owners of privately held businesses and incent them as to why they should start planning. What does that look like? And I think the one thing that I really try to push, because privately held business, everything comes back to family in the world, as far as I'm concerned.
Hmm.
And when we are talking to our clients, the goal is whatever the transition looks like, we want your family, your colleagues, your employees, we want everybody to be able to come to that metaphorical turkey dinner together. And if you don't plan, you don't know what those conflicts are, and the turkey dinner is probably not going to be quite so peaceful. So really, it's trying to get everybody aware and moving on this.
That's good advice. It also reminds me I need to paint my kitchen and make a new turkey dinner. Sean, there was a unique point that you had raised in the past, and you have this unique perspective of, well, of expanding brick and mortar operations in the United States. I mean, it's hard to think of a more challenging time for a Canadian business to be doing that. So I'd love to hear, I'm sure our audience would love to hear about what that experience has been like for you.
Well, it's been really exciting and challenging at the same time, Jameson. On one hand, right, we have the current U.S. retail environment that are constantly looking for experiential retailers and growth from a sector like ours. So there's opportunity, but the hurdles are real here too. We've seen higher build out costs compared to Canada, very, very different labor laws within the country of US and across to the different states as well, and stronger competition for consumer attention. There's a lot of ambiguity politically and otherwise that we need to learn to read to be successful right now. What's helped us is I don't know if a lot of Canadian businesses do this, but treating the U.S. not as an extension of the Canadian market, but as a zone, right? So we'll target our store designs, product mix, and staffing to local demand while still keeping the core Sakoshi DNA. But from what we've seen, I'd say the early data shows us demand for Asian beauty is strong cross border.
And how do you account for, I mean, I suppose you just need to be more adaptable to, like, like the hurdles are high. Is it fair to say that they're not static in how high they are, right? They seem to be getting higher and higher. Or is that just sort of a outsider's third party perspective? Is it actually more easy to predict what challenges you're going to face when you go in if you do the research?
It is definitely a lot, not. It varies it varies widely regionally, more so than what we see in Canada.
Hmm.
I think the hurdles are definitely higher in the last few years compared to the before, and things are I think things are changing a lot more often than what we've seen before as well.
So do you have to adapt to those changes in terms of, maybe we don't put a store here, maybe we delay the timeline there? Like, is that the kind of adaptation you need to be, flexible about?
Absolutely, and it could extend even to negotiating exit plans with the landlords to allow certain deals to happen if it doesn't work out the way we expect, right?
Yeah, that's interesting. Jason, it's sort of a similar line of questioning that I wanted to put to you. I know you talked about this a little bit already, the question of pricing your products and how you need to factor in, tariffs and how many times a certain product crosses the border. I mean, how do you actually navigate pricing your products now, given that, once you set a price, particularly given you have those paper catalogs, right? Like it does that create an additional challenge for if circumstances require that product's pricing be changed?
We have about 24,000 active products right now, and our practice, prior to February was fairly dynamic. We would just deal with price increases as they would come through, assess them, and negotiate with the vendor. Because of the sweeping changes on trade and tariffs, and now the elimination of de minimis, which was a pretty significant impact to us. I know Claire mentioned at the beginning, CUSMA, really protected a lot of trade, but unless you're 90+% of our products flow through into the US and orders covered by de minimis. So we now have, I think our last recent count is 60,000 price reviews since February.
How does that compare
60,000. So
historically?
we would do maybe 15,000 in a year, but this is 60,000 since February. So our strategy in response to this has been to create a more robust pricing model so that we could flow through indices. We have an ongoing tariff classification database,
Hmm.
which is always subject to change. So we've had to create tools for efficiency in direct response, to the number of now price reviews that we're doing that are always subject to, the next change in any potential tariff rule. And that used to be a 2.5 person job, but it just so happens, our CEO is our chief merchant, and he's the one spending the weekend at the cottage reviewing all the prices. Sadly, to come in on Monday sometimes for it to be reversed, as I said earlier.
Hmm.
But for us, it's actually building out more efficiency and better tools so that we can review pricing quickly and bring in new information that wasn't part of the calculus before.
So you've all answered this question to some extent in different ways, but I want to broaden it a bit just to see if we could capture a bit more, actionable advice for some of the small business owners, medium-sized business owners who are listening today. So I'll start in the, reverse order that I started with. So Tara, we'll start with you of any advice that you would give to business owners that are navigating this uncertainty, things that they could do today that they maybe aren't doing already. And I know the transition plan is probably one of them, but things beyond that.
Yeah, and transition plan is definitely one of them. And Jason hit the nail on the head with being nimble and willing to change. I would say one that we haven't talked about so far would be really start looking at a strategic review, whether that's an internal review or an external review with your advisors. Sit back and assess, where are we? Where are we strong? Where are we, weaker? What are the changes that we can make? Where do we want to get to? Just looking at the bigger picture. And then I would say the other one is, the world is changing so quickly with automation, digital transformation, sustainable practices. I would say engage in that engage in that conversation. Be open to it. It is absolutely amazing what technology can bring for us and do for us, and it can redeploy our people into something of such much higher value. And that's kind of in the micro and the macro. In our world, we've got software that's helping us craft our emails in a better fashion so that we can respond more fully to our clients, versus automation in the manufacturing world is a completely different beast. So open the breadth and see where it takes you, I guess, would be my advice.
Sean, words of wisdom.
Mine is to build optionality in your business. Don't rely on just one supplier, one market, or even one way of reaching customers. For us, that means omni-channel, e-commerce malls, marketplace partners, the importance of diversification of markets, whether it's just across Canada or expanding into the US. And it also means planning for volatility and cost and demand, right? Like what Jason talked about, having a robust pricing approach. I think the second piece is cultural, making sure that your teams and organization are empowered to adapt on the ground without waiting for approvals from the top. That they have the tool sets and support to change. I think ability beats perfection in certain times.
Sure, was that old saying that perfection is the enemy of good. Maybe is a good thing for folks to keep in mind. Jason, you've had a lot of really helpful advice that you've sort of peppered throughout your comments here, but was there anything else that you sort of had in your back pocket that you wanted to lay out on the table? Now would be the moment.
Well, I'll take a lane change here on like business academia, and I'll share what I share with our team all the time. Like a 1980s video game, we all have a little energy cell in the top right corner of our screen. Stop complaining. You know what I mean? Focus on positive energy. Like it's preserve the energy that you're expending day to day, because, currently we need it. Like we really need it. And the challenge for our team is to just be really intentionally aware of where you're expending your energy. And there are times we will be stretched. So, be ruthless with it. The other thing I would say to all the small business owners or mid-sized business owners out there is, strategy, as we know, is a process and a journey. It's not a 2-day retreat. So be bold enough to step back and say, let's reset where we're going based on, the complexity and the degree of change in the world today. We had, as I said in the opening, a well-drafted and researched plan, and it was heartbreaking for people to hear we're going to suspend it, because for the next foreseeable future, we've got to be able to respond, and that's where our energy needs to go.
There's a lot of support out there for small businesses, of course, although frankly, so much so that many small business owners may not be aware of it. So, Tara, maybe it would be helpful if you could mention a few of the government programs that exist that could help small business owners navigate the current environment, particularly ones that maybe aren't that well known.
Yeah, that's a great question. And it is, their government policy really does drive and incent us to make us stronger. And I think the one hallmark that everybody knows and has just been ramped up a bit is the Scientific Research and Experimental Development Program. It's been around in different forms, 1930, 1977, and the one that we have now, which has been morphed and grown, was launched in 1986. And essentially, just as an example of the quantum here, from 2024 and 25, $4.5 billion in incentives were given to Canadian businesses for research and development. And the way that we like to phrase this with our clients is, if you are trying something new within your business, some process, some procedure, some anything that you are doing, and you're going to try it, but you're not sure if it's going to work, that probably is SHRED. And it can fall within these incentives. So there's a lot of help out there to apply for these and get these refundable credits. There's 4.5 billion that was given to 20,000 businesses in that 2-year period. So I would say that's the one keynote to go for, but really sit back and think, am I doing something that is different and I don't know if it's going to work? I think it is, but I'm not sure. Well, that's where you need to talk to somebody about whether you can get some of those costs back. There's accelerated investment income and expensing rules, which they've ramped up. And it is when you invest in certain types of products, environmental manufacturing, there are premium or priority deductions for those. And there are a whole bunch more government funding programs. There's one called Canada Strategic Innovation Fund, and it streamlines capital to help businesses invest. We do have on our website a brochure which talks about project-based incentives and grant programs. There's 20 of them listed there. And we do have a team, and there's lots of teams across country, not just Doane Grant Thornton, but we do have a team that is set and ready to help people walk through those and have a conversation. So I would say ask for help and look for those incentives, because really what the government is trying to do is, this is where we're weak, this is where we want to get stronger, therefore let's focus some type of incentive that direction.
Well put. We just a couple more questions before we open it up to the audience. But Sean and Jason, I want to get your views on what Tara was just talking about, particularly if there's things you think the government should be doing that could support Canadian businesses that they aren't doing right now. And what would those things be? Sean, I'll start with you.
Yeah, there's two things on my wish list, Jameson. One, I think it's more targeted support for high growth retail and consumer businesses. Most government programs that we're aware of are geared towards traditional sectors that government wants to encourage. So that can include right now resource industries, traditional manufacturing, or even high tech. But there's a whole wave of Canadian consumer brands with global potential that needs to have better support to compete internationally. Second, for me, I think it's more agility in the regulatory processes, especially for consumer products like beauty, where a 6-month delay in approval can mean missing an entire global trend cycle, right? To be clear here, I'm not advocating for less regulation or consumer protection. I think it's just the opposite. But the Canadian consumer regulatory framework lags behind other parts of the world for speed, clarity, and process, at least for the categories that we're concerned. And that can lead to real competitive disadvantages for Canadian businesses.
Jason, what's on your Ottawa wish list?
Well, we participate in half a dozen of the government programs, which we appreciate, but so many of them are slanted to job creation, as they should be. The one gap I feel in the majority of the programs is uh, job protection in Canada as well. Like sometimes we are forced as organizations to invest in things to ensure that we remain a strong Canadian healthy brand. And often, so many of the program qualification criteria is based on growth, not protection and sustainability. So we would like to see a little more consideration for that. Also, the de minimis is hanging, the de minimis into the US has been removed, but de minimis into Canada has not, which creates an unfair playing field. So, that I know that's a hot topic with the Retail Council of Canada, and they're, monitoring that one closely and trying to influence the outcome. But fundamentally, I'll share an expression we used at our strategy session. It's been easy for Canadian businesses to think north-south. And we need to challenge ourselves now to think east-west. And that's east-west, within Canada, but east-west in the globe. And our federal government has our complete support to work through the east-west expansion and the north-south solution.
That's a great point to, I think, go to audience questions on, and of course to welcome Claire from RBC back into the conversation. Claire, actually, we had a number of audience questions that dealt with exactly what Jason was just talking about, the need to have that more east-west mentality. So not just expanding interprovincial trade, but diversifying our trade relationships beyond the, heavy dependence on the United States. What needs to be done or what can be done that isn't being done already to encourage that?
Well, in terms of breaking down interprovincial trade barriers, well, first of all, just to give you an idea, and I think this is research done by the IMF for how much these barriers amount to. They estimated that is the equivalent of a 20% tariff,
Wow.
just based on these barriers. And by comparison, what Canada was imposing on some of these its external trade partners was 1%. So is perhaps, I mean, obviously the geographical sort of limitations and proximity also plays a role, but then it's not really surprising that some of the provinces trade more with the United States than they do with other provinces. And we're seeing good efforts in terms of breaking that down, but that will take time because a lot of these, especially when it comes to, credential recognition and making sure that healthcare practitioners can practice in multiple provinces, these will take time. So in terms of whether that's going to, in a really short amount of time, make up for the losses that we're seeing on the economy because of the tariffs, the answer is probably no. But nonetheless, it's really good start towards the direction and like a huge issue that should have been tackled for a really long time.
So I'm not sure who may be best to tackle this next question I see coming in from the audience. So maybe we'll do the old-fashioned hand raise. In what ways can Canada modernize its trade frameworks to account for the growing prevalence of digital goods, services, and data sharing? So, not sure. I know Sean and Jason, you were both working physical goods, so maybe a bit outside your wheelhouse. But Tara or Claire, either of you have any thoughts on that?
Sure. Yeah, I can start. So I think, yeah, services trade has become one of those things that we're paying more attention to. Well, number one, because it's very hard to track, but then also it's very hard to tariff. Uh, so essentially, and it's easy to diversify really. And we are seeing that Canadian services export is still somewhat concentrated. And the fact of that is pretty interesting because even if you were to think about, the traditionally goods exporting companies, a lot of them do employ legal professionals and accounting services that are services really. And so there is a lot of services trade tied with goods trade. But it is certainly one of the areas that I think is worth pursuing. And broadly in services trade, and this is one of the things that not a lot of people notice, is travel is actually counted as as a services trade component. And that's where we're seeing some very interesting trends. I mean, we've kind of heard of like less Canadians were opting for destinations in the United States. And that's one of the components that we actually run a huge trade deficit with the US before, travel trade services, meaning that more Americans in any given year come to travel in Canada and spend money in Canada than Canadians were spending money in the United States. And that's grown to be even sort of more of the case these days, which is kind of also counterintuitive given the current administration's goal, which is to close that deficit.
There's no shortage of irony to the actions of the current administration. Tara, did you have anything to add to that subject?
I think, yeah, it's a really big, well, hornet's nest right now if you think about tax, and we have all of these digital services that are floating around the world, not the country. And where does the company live? Where does the tax land? And based on the service. And so Canada put in place the digital services tax, which was applicable this year, and then we withdrew it. And that was because there was a very much uncertainty outside of Canada, and the US in particular was uncomfortable with how we positioned it. There is a proposal from an OECD, so kind of a world global, how do we want to do the tax all of these services that are floating around Canada, but we don't have a real answer right now. And so structuring is something that is happening in different places, and there will be some type of agreement within the next year or two, which will kind of land with something that all countries can agree to. So I would say that's definitely a place where we can watch and will see some change.
So I did just see one question specifically for you, Tara, while you have the stage here. You mentioned that large shift of leadership coming for private businesses. The audience member wants to know if this is a normal volume or if we're anticipating an abnormal glut of business transitions, and if so, what is causing this? So I'm guessing demographics probably has something to do with your answer.
Yeah, 100%. It's called the silver tsunami.
I
And it
haven't heard that
really,
one.
if we look at it from a demographic perspective, it's the boomers. And they've been in the market, they've been growing the economy and the business, and they are now getting to the age where they are ready to transition or being forced to transition. So it definitely is a statistical anomaly for about the next, I think, 5 to 10 years, which if you look at it back to, what our demographics say, well, that is the boomers.
hmm And what's going to be the impact of that, right? I think we talked a little bit about before about the rise of private equity search funds and things getting rolled up in that way. Is there a risk of getting that increased market concentration and monopolistic, oligopolistic, all the opolistic issues?
A question for me again. I think definitely we are seeing private equity coming into many markets, and they're spreading out and looking for what are the places where we can create efficiencies. So definitely, dentistry, vets, optometry. See, I can't see words either. Even in the accounting world, we are seeing that down in the States and different countries. It hasn't hit Canada yet, but it will. So I don't think there is a market out there that we won't see some type of consolidation. And what does that look like? The other flip side of what I think we're going to see is if you think about when a business gets new leadership, there's new ideas and there's change and there's innovation. So once we settle through and roll through this, whether it's with private equity and they bring in different structures and different drivers, or whether it's more private holdings like the private ownership, I think we will see a surge of basically change and ability to change, much like what Jason and Sean were talking about. It's okay, great, I've got the reins now, I'm going to run.
So we have just a minute left, and I see we have one more question in the queue. It's for Sean. You mentioned this a little bit, Sean, about consumer behavior varying greatly region to region. So the question is, how do you cater to those micro markets, and do you see a drastic difference in consumer behaviors within Canada as well. So
I think the geographic and regional variations within Canada is a little bit lower than what it is with the US. And for a lot of Canadians, I think it wouldn't be surprising to know that we have a lot more in common from, in Ontario with Northeast US than they themselves do with somewhere like a Texas. So
hmm,
it is a lot of consumer behaviors to keep track of. And what we do is a lot of managed micro tests and experiments. You have to keep on your toes and be prepared to change directions, whichever, resonates with the customers and their behavior, they're better.
a great note to end on. I think I've certainly learned a lot. I hope that our audience has as well. It's been a great pleasure being able to facilitate this conversation. So, on behalf of myself and the rest of the Globe and Mail, I'd like to thank Claire, Sean, Tara, and Jason for joining us today. I'd, of course, like to thank all of you in the audience for following along, and for those of you that submitted some very interesting questions. Last but not least, of course, Don Grant Thornton for supporting today's webcast. We will be sharing a link to the recorded webcast, so we'll get those suggestions to the federal government over to Mark Carney just as soon as we have that all packaged up for him. That'll be in about 1 week. So to Jason's point, we'll probably see U.S. trade policy fluctuate 50 or 60 times between now and then. But in the meantime, thank you again, everyone. Hope you enjoy the rest of your day.